Today we are going to discuss about ratio analysis. First, meaning count. Ratio may be defined as an arithmetical expression which shows the relationship of one number to another. ଯେମିତି ଆମେ କହିପାରିବା କି A is to B, ଯେମିତି କହିପାରିବା, or as a simple fraction and decimal fraction or percentage ଯେମିତି କହିପାରିବା ସେଟା କହୁଛେ ଆମେ ratio. Ratio uses two numbers and is obtained by dividing one number by another, and it expresses one number in terms of another. Okay, the ratio analysis ratio analysis is used for analyzing, interpreting the financial statement. It also helps in decision making process by providing useful interference. And according to Myers, ratio analysis suggests study of relationship among the various financial factors in a business. Then objectives of ratio analysis. Ratio analysis objective. The first objective is measuring the profitability. Profitability measure the various ratios such as net profit, gross profit, and expenses ratio can be used for the purpose of measuring profitability. Then measuring efficiency, operating ratio are calculated for the purpose of measuring the operational efficiency of the business. ଆମେ ଜାଣିବା ଯେତେବେଳେ ଆମେ kinds of ratio ପଢିବା ସେତେବେଳେ ଜାଣିବା କି net profit ratio କ'ଣ, gross profit ratio କ'ଣ, then operating ratio କ'ଣ. Then also solvency of business. The solvency ratio establishes the relationship between total asset and total liability of a concern. It helps to show whether the firm has enough asset to fulfill the debt obligation. Any firm which has enough asset will be considered solvent. Then financial status of the company. The fixed asset ratio and debt equity ratio comes under this category. These ratios are used to determine the financial status of the company, and it is also useful for determining and comparing long-term and short-term financial standing of the firm. For long-term financial status, various ratios such as proprietary ratio, fixed asset ratio are used, and current and liquid ratio are used for determining the short-term financial position. Then also comparative analysis. The ratio can be used for making temporal comparison between performance of a business. It can also be used for comparing two business identity having similar or different features. This analysis helps in determining strength and shortcomings of the business. The number of benefits of ratio analysis. First is helpful in financial analysis. Ratio analysis helps business in assessing their financial standings. It can be used for short-term as well as long-term financial analysis. And financial statements such as profit and loss account and balance sheet are used for this purpose. Then also useful for locating weak areas. Ratio analysis can be used for finding areas of weakness such as high ratio of expenses or increase in debt and taking remedial measures. Then for future forecasting. Financial analysis can be used for the purpose of making future planning and forecasting by the way of budgeting. Then also inter-firm comparison. Financial analysis facilitate inter-firm comparison by bringing their performance to the same scale. Then also simplified presentation of accounting figure. Ratio analysis provide more meaningful figure by showing relationship with different metrics, and absolute profit figures such as 4 lakhs in profit does not say much unit or unless it is put in relation to total revenue. It offers information in more compensating manner. Assessing operating efficiency. Ratio analysis not only shows financial standing of the business but also in evaluating operating efficiency, and various ratios such as debt to turnover or inventory turnover may be used for this purpose. And these ratios help in analyzing different aspects of business quickly and accurately. This is done by calculating accounting ratios. Then also limitations of ratios analysis. First असला false ratio. Like ratio analysis is calculated by using financial statement. The analysis would be incorrect if statement are error. Statement have any error, then limited utility of particular ratio. In order to make a comprehensive analysis, it is important to use different ratio. A particular ratio may give a misleading result. It is advisable to use various ratio for making meaningful and correct conclusion. Then no fixed terminology. Ratio analysis is still evolving and various terms may be interpreted in different ways. This makes comparison difficult. For example, a ratio requiring use of profit may be calculating using profit before tax or profit after tax. This may give a error result. No attention to quantitative factors. Ratio analysis is no attention to qualitative factors, and ratio analysis is quantitative and does not takes into account the qualitative factors. This gives one-sided views and overlook inflation. Since ratio analysis does not pay attention to change in price level, the temporal comparison does not serve much purpose. For example, cost of production of 2 years may not be meaningfully compared if there has been big changes in figures due to change in price level. Inflation or deflation also affects revenues and profits of the business. Then misleading results. Ratio analysis brings financial statement of different firm to same level. Such analysis does not provide information about magnitude of their operation. For example, two firms may have similar net profit ratio but greatly different scale of business. A firm generating 50,000 profit on 5 lakh in sale is more efficient than the firm generating same profit on 10 lakh sales. That is limitations of ratio analysis. Now take a types of ratio analysis. First is liquidity ratio, leverage ratio, activity ratio, profitability ratio. Liquidity ratio. These ratios are used to determine short-term solvency of the firm. In other words, it analyzes the firm's ability to meet the current obligation. Liquid ratio, absolute liquid ratio, and current ratio are some of the ratios which are included in this category. Then also leverage ratio or solvency ratio ଆମେ ଯୋଉ କହୁଛେ. This ratio determines the extent to which an enterprise makes use of borrowed money. Main ratios include under this category are debt equity ratio, proprietary equity ratio, interest coverage ratio, and capital gearing ratio. This ratio helps to determine a company's long-term solvency. Then activity ratio or turnover ratio ଯାହାକୁ ଆମେ କହୁଛେ. These ratio are calculated to assess a firm's efficiency in employing its assets. This ratio are also known as turnover ratio. ଯେମିତି ମୁଁ କହିଥିଲି ତୁମକୁ ୟାକୁ ଆମେ କଣ ନା turnover ratio ବୋଲି ଜାଣିଛେ. And as this ratio calculated the volatility with which assets are converted into sales. Several types of ratios include in this category just fixed asset turnover ratio, debtors turnover ratio, and stock turnover ratio. Then our last ratios, profitability ratio, gross profit ratio, net profit ratio, operating profit ratio, and expenses ratio are some of the main examples of profitability ratio. These ratios calculated overall performance of the business by using ratios such as return on equity, market capitalization ratio, price earning ratio,